Let's Get Down to Business is presented by Bravo, the marketing arm of Ash Brokerage Corporation, the practice enhancement company. All this week, it's our series on the transformation of advisors into CFOs. And on today's show, financial wellness through retirement management. And with me today, accredited investment fiduciary and CPA, Levi McMillan. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. Let's get down to business. Well, welcome Levi, day 5, Friday.
Been great.
We're talking today about, I want to be a CFO, right? Well, everybody wants the pay of a CFO. They want the glamour of the CFO. I don't know if they want the headaches that come with it sometimes, right?
That's right, absolutely.
But we're talking about a big one that I think a lot of CFOs like. If you're an advisor and you want to become a CFO of your clients, quarterback all his concerns, addressing retirement is a big one. And when I think about retirement, I just don't think about my 401k and maybe some of my non-qualified monies. I'm thinking about my Social Security, my Medicare, my eldercare, my long-term extended care. Right. I have a lot of needs, and I'm going to be here for a little while if life expectancy, if the rumors have it that we're going to be living longer than we ever have before.
Right.
So when you approach retirement, I'm thinking of how do I know how long my client's going to, I do a part 2 life insurance application just to mark what I think his expectations are going to be rather than just plug in some number. Because I'm trying to find actuarially, what is that number? From a retirement point of view, if you have 10 years versus 25, 30 years, isn't that going to make you make a different decision as his CFO?
Absolutely. When we meet with clients, that's the big question that I say, what kind of lifestyle, first and foremost, do you want to have in retirement? And when does retirement start for you? And so I like to phrase it in that you don't have to retire at 60 or 65, but let's put together a plan so that you have the financial independence and you can retirement and you have the financial means to be able to do that.
When I think about the new numbers, I mean, a lot of baby boomers now are thinking about holding off on Social Security till 70 because that 8% simple is a pretty good return, and I don't know if I can get that in the market right now. So I'm looking at things like that. I'm looking at waiting for my 401k till I'm 70 and a half when RMDs, required minimum distributions, click in. Some of these it seems like we're pushing back the retirement timeline even with boomers.
Right. Well, that's the whole strategy to how do we minimize the tax liability and looking at the whole picture. Okay, we've got a whole seminar and strategies on how we maximize Social Security. Does it make sense to take it immediately when we can, to defer that, and we look at all the different components with that client. We also, obviously the last money we want to touch is the qualified money until we have to, if they have that luxury, so that we can defer that tax as long as possible.
When I'm looking at timelines, I like there's a whole new mantra and trend in retirement right now to at least get something guaranteed for my life to pick off my baseline foundational expenses. Have you seen that in your thinking as well? I mean, that seems to be a brand new trend. No matter what else I do, I got to have something foundational that undergirds my expenses of my retirement.
Absolutely. And so for a sliver of your retirement bucket, we can use annuities and different things that are like a pension plan so that we can have a guaranteed income for retirement to take some of the market risk and all of that out of the equation. So we weigh the needs of income, the liquidity needs, and the time frame, and ultimately putting together a plan to figure out what we want to use or what tools to use to accomplish what you just mentioned.
Well, I'm looking at elder care, senior marketing, Medicare, Social Security, which have definite impacts. They're components of this. When we're doing this, does it matter when I take money out? What monies come out first? Does it all matter?
Absolutely.
So there's some correlation. It's not just distributions, it's what comes out first in your mind.
That's right.
Now, have you modeled this before? Have you looked at numbers and you have a modeling, a retirement model that works for this on the software or something?
Absolutely. That's just part of our life plan where we'll model and we'll say, look, what's the tax implications and the net cash flow of taking money out of this bucket or this bucket, and we maximize how to get the most to the bottom line by pushing it out or deferring the investment income from the different buckets.
I've noticed another new trend that people are now re-looking at converting their qualified plans to Roths again. I mean, this all of a sudden, this is all making the table again. We were at the Innsmouth convention 3 weeks ago at their 30th symposium, and I'm looking at numbers that dance. I mean, real numbers. Have you seen this as another trend in your retirement planning with your solution team that people are kind of drifting towards?
Absolutely. The one unknown is what are the tax rates going to be when they retire. And so therefore we'll make assumptions based on, okay, if if tax rates stay relatively the same and in retirement their tax rate is going to be less because they're going to have less income, then a Roth conversion might make some sense. So we will run different scenarios to look at what makes sense based on the current assumptions that we know.
Now, the strategy that I've heard, and I just want to ask you because you do this every day, I've noticed that if I got about a 5 to 7 year before I retire, that kind of timeline, and if I can amortize my Roth conversion in sections,
Right.
I don't have to do it all. I can kind of try to stay under pushing myself up to another progressive tax bracket or another marginal tax bracket.
Right.
Have you seen? Do you guys do that a lot?
Absolutely.
Have you seen that? Well, let me ask you this: do you think people? Is it still hard for clients though to say, "I know the math is right. I know you're saying, but you're asking me to write. Look at the tax bill you're asking me to write."
Yeah, it's very hard because they're not convinced that the tax rates, what's going to go on with the tax rates. I mean, it's kind of the fear of the unknown, and then to go ahead and give away that cash or that money versus holding on and waiting is very difficult for them.
Well, and I've been on USDebtClock.com at 17 trillion and counting. And the next election by 2016, they're predicting it'll be 20 trillion. I'm not really sure how taxes are going to go down.
That's right.
It could,
Right.
but I'm just saying at 20 trillion, unless there's a major discovery of oil or whatever else in the United States, I just don't see the revenue. But we'll see what. Well, when we come back from the break, we're going to continue addressing retirement management as part of our overall financial wellness strategy that can position you as the CFO for your clientele and a marketing tactic for prospecting for new clients in your community. And don't forget, you can request our own management expertise documents from background technicians, especially on retirement, right out at downtobusiness.ashbrokerage.com or go out to BRT by itself and hit their website at brtnow.com/trialsignup.aspx. We'll be right back after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back. I'm Steve Savant with Levi McMillan, and remember, you can watch all our episodes of Let's Get Down to Business, including my weekly consumer show, Steve Savant's Money, the name of the game, right out at ashbrokerage.com. Just click on the show logo, and it'll take you right to the homepage. And just a heads up before moving forward with any of the ideas on our show, always consult your tax advisor or legal counsel as well as your broker-dealer compliance officer. Well, let's get down to business. We're talking our day 5 of our strategy to become a CFO. I love your organization, CFO for Life. You can hop out to their website and look at it. I think the concept is really huge. Many advisors have been looking for some kind of a way to template their practice and move in with other people to be on a solution team because we can't cover all these areas as experts.
That's right.
And we're talking about retirement, and talking about retirement, I just saw a retirement timeline where we were talking strictly and mostly I would say on the investment side of this equation, but we brought in an elder care attorney that went into that person's house, I mean, just to show you where this is all going, and said, we're going to reconfigure your entire home because you're now at 76, and I think it's time to get the the bathtub you can walk in, all these things. They're already thinking about this way. She was the first one to bring this to my attention. I'm thinking, this is a whole new thing of planning. I not only have to plan, I have to plan how I'm going to reconfigure my home if I want to stay in it. Most of us are going to need some care. And I don't know about you, but Levi, you and I want to do it at home. Right. I want the people to stay at my house in assisted living. So when I'm looking at this, do you see that component? This is another new trend. This new trend of elder care, extended care coverage being part of and parcel of retirement planning and even thinking about the architecture of your home.
Absolutely. Elder care, long-term care, all those components kind of go back to our previous discussion on risk management and how that's very important. to bring in when you're talking about retirement. And just like when you're putting together the different income streams or pension plans for retirement, you can't forget about having excess liquidity. So you for those different scenarios that might be above and beyond their monthly income needs, you need to also plan for additional things like that can come up.
When I'm thinking about the discretionary money of retirement, I mean, I want to go places. I want to see some places, right? I don't want to just stay at home and pay the bills.
Yes.
In your life plan, the way you have forged that, and you've crafted this really great life plan, does that life plan accommodate my kind of dreams and aspirations?
Well, we put in what we call a cushion. So we build the life plan, and then when we get into the retirement years, we have, okay, here's what we believe the lifestyle you want to have. We put in an inflation rider in there to keep up with at least a 3% inflation expense, and then we build a little cushion, which we call, whether it's vacations, whether it's travel, whether it's just extra money to spend, we build that into the whole model.
Well, I'm looking at retirement planning, which a lot of advisors are into. They say we're into our market is senior market. And they seem to be cherry picking those components of retirement, but not doing a full comprehensive plan. Under your life plan, you do I almost hate to say this, but really basically from the day you decide, even if it's transition, you're not fully retiring, you're doing some transitioning into it, you're still part-time work, part-time receiving some of your income. You do a transition planning because I don't think everybody is ready to go from, I just got paid a W-2 December 31 and January 1st, I'm going to be down 60% from what I was earning.
That's right.
You know, I mean, this transition, and I know that your plan actually addresses segue or transitional periods before you get into what I would call full retirement.
Yes, that's a difficult transition. I mean, you've been working your whole life, making money, building for retirement, and then just to, in a split second, shift gears is very difficult. And so what we like to call is, hey, you've reached the time of financial independence. So you do have the nest egg or the asset base to be able to have the lifestyle and retire with dignity when you choose. We like to make it a choice, and therefore, we have a transition period. And so it's building a plan to know that, hey, at this level, we can actually have that independence, but the transition plan that you mentioned is built in so that it's a smooth rather than just a cold turkey shift into retirement.
I noticed a few of the annuity products that are out on the street actually accommodate a bump up at the first distribution, and then it levels off.
That's right.
To try to accommodate this very transition period you're speaking about. Well, in your plan, I love your plan because it's I don't want to say exhaustive, but it's so comprehensive, and it covers and touches all these areas. And I have to say, if you go through this plan, even as an advisor, you'll say, I didn't think about those things. I, as an advisor, did not cross those things in retirement. So when we're talking about being the CFO of your plan, you want to oversee your clients. I can go to you as a retirement. Let's say my specialty, I'm into investments, but Steve, long-term care, I don't even know what that means.
That's right.
I need somebody else to help me through that. So you can partner with people, even in this segment part of financial wellness, retirement.
Absolutely.
And so when your team, this is our last part of our segment for this whole week, your whole idea of being CFO for life, your whole idea of partnering with other guys, moving your practice into a plurality, a shared business model, seems to be the way to go because it then can address, you have experts on your team. This is way beyond a study group.
Right, way beyond. I mean, we want to change the world, and we want to, being a fiduciary from day one in the CPA profession, we want to bring that level of detail to the financial planning market and build a best of breed in insurance, financial planning, taxes, risk management, and be that quarterback and share what we've built with other like-minded advisors so that they can leverage and we can ultimately do the best thing for the customer.
Levi, thank you for being on our show. I love the idea, CFO for life. Well, that's our show for today, and don't forget you can read all my online insurance news commentary, advisor blogs, and articles on Producers Web, as well as my answers to consumer questions on the Insurance Library. Remember, you can view any of our past episodes of Let's Get Down to Business right on our demand section, right at downtobusiness.ashbrokerage.com. So follow me on Twitter, Facebook, LinkedIn, or just email me, steve.savant@ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant.